I'm going to have the chats up. So I have the chat up. So feel free to, communicate in there with me as at will. But of course, I will do my best to focus on the markets and then, of course, add in as well. Let's just see. I think I might have a message coming in from the team. I just want to make sure I've dotted all the I's, crossed all the T's. All right. Looks like we're all good. Okay. So we're all good now. All right. Let's go. Everything that I do and say here, folks, is for education and insight purposes only. It's not meant as advice. I'm not a registered financial advisor or representative. You must consult yours before making any trading decisions. Trading involves risk, not just reward, risk of loss. Trade with money you can wholly afford to lose. When I trade, it's always in line with my risk trading plan, which is unique to me and might not be suitable to you. Consult your registered financial advisor and get a risk trading plan. When I discuss past trades taken, do live trades in front of you, or come up with plans and projections for future potential trades. I'm doing so, whether I'm doing so with respect to a live cash account, a demo account, or a prop trading account, I'm doing so all for education and insight purposes only. It's not meant as advice. Finally, if I poll you in the chat and I give you an average response back to the poll, the sentiment there is not necessarily indicative of the sentiment of the entire group, just those responding. I don't audit the chat, so do take that stuff as anecdotal. All right, I think we are good to go. So let's get right into where things are at. So I'm going to start off just with a little bit of the lay of the land here. So we're going to start off with just understanding the position of the market, okay, against some structures. We'll understand then the technical signals and the tradability behind that. So the position of the market, as you can see, the S&P E-minis are in this long-term uptrend channel. That long-term uptrend channel starts in October of 2022. The center of the channel is in focus. I'm going to zoom into the hard right edge over here so we can take a look-see at where things are positioned. And as you can tell, we have moved up, obviously, off of Friday's lows. And Thursday's lows, last week's lows, really. We're up about 0.8% on the S&P E-minis at this moment in time. The Nasdaq's doing a bit better than that. Not quite double that, but doing a bit better than that. Let's just give you a view of that. It's up about 1.25% at this moment in time. So both of the major contracts that we trade here that we use to analyze the market as well, they're above the center of their long-term channels. Okay, now that's a very important area. If we are to come down and see the Nasdaq break below 28,100, there are monsters below, if you will. Now, an initial test of that line should resolve to some sort of a bounce. But it can bleed below, snap below, and then slingshot back above. This is a very important area to note down for the week overall, 28,100 on the NQ. It's a few points above there. And for the S&P E-minis, that similar number is a 73.92 or in there. Yeah, 73.92. That's that very important danger line. Now, we're well above the danger line at this moment in time. The way that I think that the week is likelier to play out is more likely we're going to try to push up into this major area of resistance for the S&P E-minis. It's the same infamous set of volume point of controls that I've been talking about for the last couple of months. Effectively, the 75.50 to it really spans from 75.35 all the way up to 75.60. You hear me continuously quoting 75.55 as the number. Just leave it at that number. That's the number that we need to get above. It's a number that I think that we are going to likely get above this week, but not necessarily sustain above for the week. So push up into this structure, bleed above it, potentially come up to the all-time highs, driven by what? Better than expected market response to the Mag 7 earnings, and a Fed that does not create really a dent in the market. If anything, they're going to probably demonstrate less and less guidance, forward guidance, and that might actually end up being a positive for the market. All right, the market will slow down into the Fed event, which is before Microsoft and Meta on Wednesday afternoon. The Fed event's at 2 p.m. We get the statement being released. And at 2:30, they're going to have a press conference. And we heard Warsh's debut, Kevin Warsh, the Fed chair now, saying that he's not going to be providing a dot for the dot plot. And other members are not doing so. Some members have stopped doing so as well. So they're going to be a little bit less influential on market direction, if you will. But it's a transition. It's a transition. The market's we're gonna have to feel out how the market responds to it. My view is that it's less likely going to be disruptive to the market. If anything, it'll actually potentially be a positive. And then we have to deal with Microsoft and Meta. Microsoft's probably going to see some, good enough results for us to see the market respond, kindly to it. Meta is a wild card at this stage, right? If you know anything about the storyline that's been happening over there, there are some, some big questions and concerns, and there are some potential big opportunities based on the labor that they've been stealing from other companies to build their, AI arm out, if you will. But again, I'm not an expert on the individual plays. I just have a general sentiment, and of course, looking at the chart analytics, I think Microsoft's probably going to do fairly well. Now, we can also, kind of support that a little bit by looking at the positioning of the markets. The positioning of the individual Mag 7 stocks. So if you look at them on month to date volume weighted average price codes, this is what you're looking at. It looks a lot messier than you'd think, of course, but these are just bell curves tilted 90 degrees on their left-hand side. They start at the beginning of July. I focused in at the end of the month over here to show you that, hey, something like Amazon is in the area where it's more likely to mean revert. Okay, something like Meta is in an area where it's not dropped into its downtrend zone. Okay, things like Tesla that have already released earnings are in an area where they can mean revert and get pulled up by some of the earnings plays that release. Apple is actually in a location where it's one standard deviation above its VWAP. It's actually in its uptrend zone. It can get pulled up. Microsoft hasn't dipped into its downtrend zone area. So the net message that I'm giving you here is that the placement against prices placement against volume weighted average price cones month to date is more leaning to the optimistic side for up than pessimistic side for down. That would be the net message that I can give you over here. Now, back to the matter at hand, back to really where the market is positioned against structures and levels to give us a good insight as to how to trade the market morning overall. Well, we're going to pivot over to the pivot template in just a second over here. And the insight again is I want to see the S&P E-minis give us a rise that takes us up into this structure and through this structure during the week based on the current action of oil down over 6% and the markets coming up above the center mass of their weekly pivot range. That would be the likely outcome. We should be pushing up into that ceiling. Does that happen today? Do we have enough gas left for that? We've got conflicting technical signals. The daily chart, 4-hour chart, they're on sell signals. The hourly chart's on buy signals, but the buy signals have been weakened into the open. So we're going to get down into smaller time frames in just a second over here. In fact, let's just do that right now on the S&P E-minis. And you can see that, there's a little gap over here. So that's the gap up. And in general, I want to look at this as a pattern that would support a continued rise. We had an uptrend for a little while, but it broke. If I zoom in on this a little tighter, let's see if I can get a little tighter in on this here. So if I zoom in on this a little tighter, you can see very clearly over here, we've got a double bottom test of the gap area. We've got an uptrend that broke. It broke around 7 a.m.-ish, 7:30 a.m.-ish. We came back down. We held support. So I think that we're consolidating at this stage to try and push up again. But it's hard to believe that when we've got technical signals on a 5-minute chart and a 1-minute chart that are in a sell signal state. And the hourly charts buy signals are starting to weaken. In fact, the NASDAQ at this moment is starting to move into an hourly chart triple S sell signal state. So I'm concerned about the current environment to support up and away. The primary market, the ES, is still doing all right. It's still holding up fairly well. It's in a buy signal state on the hourly chart, but the daily and 4-hour charts still show sell signals. So there's a very simple line. It's a weekly pivot level as well. It's the DeMark resistance 1 pivot line, 75.05. We want to stay above there. We want to stay above there in order to avoid what you just put in the chat there, Derek, which is head and shoulders pattern. All right. The idea is if we can stay above there, we're going to be in a better spot to potentially continue to try and bounce back up and potentially rise up towards this set of nested volume point of controls. But what I'm seeing right now into the cash open with about a minute left before the open is nothing great. On the 5-minute chart, 1-minute chart, it supports more short at this moment in time. So I want to get into the actual brass tacks of the technical signals here for you. Let me just reduce the number of pages I have open here so I can ensure that I have a smooth operation. But there's your NASDAQ on a 1-minute chart. It's obviously in a sell signal state. Let's go and take a look at it, from the daily chart down. The daily chart's in a sell signal state, and the champion trend pack has now seen the champion trend indicator, not only the champion crossfire off, right? So we've got the champion trend sell zone plaque in play. trail line's flat. It's not tilted down right now, right? So the idea is we have a decent chance to try and bounce up into the channel, but it's likely going to come back down again, right? So this week would be characterized by an attempt to go up into major resistive structures, but likely falling back down again would be the likelier outcome. Now, the 4-hour chart echoes that. There's nothing different there. We're in a sell signal state in the 4-hour chart. We are currently in a spot where we had a bounce back up to test the second. We didn't make it quite to the third last breakout forecaster, which is at the a little above the bottom of the MSR channel, and we're getting batted back down again. 28,600 is important battleground. 675 is an important number. 675 is effectively where the fast speed line is. Getting back above 675, we're probably going to be looking for longs. Getting above 750, it's not a question. We're going to be in long side trades likely if we're directly rising from there. If we're coming down and we're breaking much further below the slow speed line on the 4-hour chart, there can be trouble, right? 28,600 is an important battleground to hold support in order to support a market that rises. Now, we've had about a minute of cash hours trade take place, so we're going to get a little more tighter zoomed in on the action there. Just bear with me for a moment while I take a quick look at a couple of things on another screen and just make sure that we're ticking away properly with all of my tools. And then, of course, I'm going to come right back to the live action here with you. So bear with me for another moment over here while I do that. Okay. So we're at 75.03 on the ES at this moment in time. We're below the 28,600 marker by 50 points or 40 points right now on the NQ. And the question mark is, are we going to be able to sustain and come back up off of this oversold condition back above the 28,600 area and get back on the horse to ride it north? Or is this just a moment to take a short on and maintain shorts and look for the market to continue to unravel? So the message that I'm getting from the ES is, hold on, it's not ready to unravel. The message I'm getting from the NQ is, I don't care about you, ES, I'm just going to keep going down. And the 1 minute and the 5 minute charts are aggressively in sell signal states. I don't think that we are going to unravel, though. I keep coming back to the big picture pattern that I see into Mag 7 stock earnings week all the time. The market may look like it's at the edge of the abyss and looks like it's going to fall apart, but it doesn't. Now, that doesn't mean we can't have a day trade on the short side. I've already, seen enough, negativity here to say it's getting less and less likely that longs are going to work out. We're going to have to take a dip that's a little lower first. And if I want to take an initial trade right out of the gates here, in the first few minutes before we really see how this, any imbalances kind of solve themselves, it would have to be on the short side, but I'm waiting at this moment in time. If we are going to continue lower, the hourly chart has support at 28,450. So there's potentially another 75 points of downside risk in front of us here, or, opportunity for those who are shorting right out of the gates. I'm going to give it a moment here and just kind of feel it out, wait for a little bit here to see if I've got the right footing for the short. And for the ES, we are starting to see enough coordinated erosion, but I'm still not, I haven't left the gravity well of 75.05. 75.05 is still holding. That also happens to be roughly where the center of the 4-hour chart MSR channel is. So I'm going to wait for a little bit over here. I'm going to wait for a bit over here. I'm not going to jump in just yet. And we'll see. We'll see if it's attacking that gap. It might be, right? It might very well be. But at this stage, I'm going to wait. I'm going to wait and see how it plays out. So the down right now that I'm seeing on the hourly chart is becoming real. We're already in the 400s, upper 400s. It's late to take a short for me, but for those who are already in, I want to just make sure that I help you with the insight. The insight is down to 450 is likely, while we remain below 515 roughly. Down to 450 is likely. Above 515, I'd be very careful with shorts because the market likes to take you to the edge of the abyss and then rip around the other way. And that's still something that I see as having potential. So I don't think I'm yet willing to take the trade. I see enough of an oversold condition that it can get oversolder and unravel. We're back above 515 or there and abouts right now, 28,515. And the ES has come down. It's tagged 7,500 effectively. It's holding above it by a couple of points. I think we're going to have some sort of a counter trend bounce that plays out. It can take us up quite a ways. So be careful if you're short. I gave you the insight that above 28,515, shorts might be in peril. It could resume the short, but I think that what we're seeing right now is not structural, fundamental type selling. Certainly, we're not seeing strong enough buying to warrant a turnaround as of yet. That's for sure. I don't see that yet. But we've got this macro backdrop that's generally positive. The euro is compressed quite a bit from its intra-session highs. Oil has certainly come up off of its lows. But again, oil's down, over a handful of percentage points. Euro's up, I think still up over 0.1%. And hey, look, if we get a resumption on the short, this would be an area where it could likely happen. We're looking at a 1-minute chart right now. It's coming up into falling resistance. We've got rising support above us, below us. So it is a pretty big turnaround, right? Have we cleared water lines to say that longs can become cleaner? Above 630, there's not too much argument. Above 675, I have very little argument for longs. Above 750, I want to be fully long. So right now we haven't hit those markers. If we're going to come back down again, this will be either a very quiet and quick little back test of rising support and then a bounce, or it will be a direct break. So if one is thinking short at this stage, below 550, 555, even below 565, potential transactability. I'm thinking that we're going to actually come back up, and we're going to, what we're seeing right now is an imbalance fixing itself. So I can think as much as I want. I want to see alignment in signals to actually look long. The ES is telling me, it's going to try to act like a ballast and push things up. I'm trying a high risk long right now. I'm going to do it with an MNQ. So it's going to be small in size, very controlled risk over here. It looks like, it's seeing some profit positivity, nothing great. I want you to keep in mind that the backdrop is still not turned around, right? We are trying to come up and breach back up above resistive structures that could support longs a lot better. Above 630, 640, 650, it becomes a lot cleaner for me to look long. So this is a very high risk trade. It's not something that I would want to do with a full size, regular mini. With a micro, I'm comfortable trying it out. And the thesis on the trade is that there's an imbalance over here. An oversold bounce is taking place. That oversold bounce will get us back above a water line that allows the market to start breathing again on the long side. The hourly chart still has, we have to get above effectively the fast speed line, which is where the center of the channel is. 28,650 would be the number. And look, right now, it's very difficult to say that it will or won't, right? We had a nasty drop that's gotten bought back up. And I'm kind of getting some skin in the game to just kind of get a feel for whether or not this oversold condition leads to a bounce that's valid. But if I start getting into, high double digits in terms of red, I'm going to get out of the way. I think we're back testing rising support. And this is that moment. Either we break it, and if we're breaking it, or we're breaching it right now. If we're breaching it and breaking it, I don't want to be in the trade, right? Even if it's a micro, I'd rather just get out of the way. I think we're still going to reverse back up, but I don't see the action that supports it. So there's no point in even that tester long. I'm going to have to wait now for another long. If it does arise for price to get above 630, if I want to go short, I am going to have to wait for close to the lows, at least 28,500-ish, roughly. And then I'm okay trying that short. Below 28,500. Again, I'm going to keep it on small size at this stage. I don't think that we've got the market behavior on oil to support gap fill. Okay? It's as simple and straightforward as that. And on the 1 hour charts, we've damaged a lot of the structures of support. Absolutely, I agree. And that is a problem. But the fundamental part of the day surrounds oil. Okay, and oil has not moved up, right? If we take a look at oil, the CLU contract, here it is. This is on a 5-minute chart. It'll pop up on your screen in a second over here. We have not gotten into the gap fill territory. We're still a ways away, and we just battered our head against a pivot level and got pushed back down. Oil down, NASDAQ up. That's the idea, at least. That was part and parcel of the thought process on the trade, but we're not seeing people willing to buy on that, right? We had a little gap up on that when we started trade, and look, we're getting closer to 28,500. We breached 500. We've got room down to the hourly charts champion trend buy zone, which is 450, and I'm not averse to trying the trade there, because if this is then a proper resumption. So roughly where my horizontal crosshairs are, right there, I'll be looking at trying to capture the short. Okay, we're coming down to it. And if we slip, we'll slip fast, but this can also be a whipsaw moment, right? So I want to be very careful. So I tried it, I'm in. Okay, and I'm getting a little sign of a whipsaw. If that whipsaw takes me above the fast speed line, which is that falling resistance structure directly above price, the trade is not valid. If we sustain below 500, we can have a slip that takes us down to a lower low than the lows that were made shortly after the open in the first few minutes, right? We got down to what, 480s? And look, I'm seeing price come right back up, double bottom fashion, to test that fast speed line. What is that telling me? It's telling me that the selling that we're seeing, the resumption trade, it might not be on. I'm willing to hold on to the trade for now. It's below my entry line, so it's in the money. And I want to see if we can get that whoosh below the 480s. And I'm still completely agnostic on direction, even though I've got sell signals in place. Right? We are in a market where oil has not come into gap fill territory again. Oil's trying to rise modestly right now, but not enough. I don't like what I'm seeing. I'm getting out of the way with modest profit or scratch at this moment. Oh, this is very double bottom-esque, if you will. Not a situation where I'm willing to stay. If I want to resume the trade, it would have to be below the lows. And you can't argue with a short. You're in an aligned sell signal state currently on an hourly chart from a triple S standpoint, 5-minute chart, 1-minute chart. So we come down below the lows, sure, I can re-enter the trade. But again, same behavior we have to be aware of, right? We can have whipsaws, right? So I've tried to catch it. I don't know if my trade executed or not. It looks like it executed a little late there. We've come down. We're now coming down towards the target area where the trade would be, it would turn around, the 50-ish area. So profit taking at around the 28,450 can make sense. And I'm seeing some slight delays on my side. I think I'm going to have to close down a bunch of windows of other things. Let me see if I can get a few things off my CPU at this stage to allow things to speed up. Yeah, it's giving me little sounds saying, "What are you doing?" I'm saying I'm reducing my CPU load. Okay, so we're in the mid 28,400s. We passed the 450 area. We're clearly coming down. No more chance for this up move as it was in formation earlier. It's in a bad state right now for longs. It's in a great state for shorts. Where are we coming down to? Well, if we break the 1-hour charts champion trend buy zone trail line, which is what we're doing right now, and that's where I kind of got the 450 from. It was the buy zone trail line right there. If we sustain below it, right, that opens the door for a move down to lows that we saw before the into the end of last week. And of course, that would be down a couple of 100 points on the NQ. That door may be opening. Okay, it may be opening. I'm not skeptical about it. I'm just going to be neutral about it until I know that we've actually breached it, broken it. And I'm waiting for the triple S line to come down into the, below the center of the channel to really support that. We're hanging around the 450 area. This could become a very easy area for a little counter trend bounce to start forming. So just be careful. at this stage. Just be careful with that. All right, it's not a moment to guess at it. Either we stay below 450 or we don't. If we stay below 450 for long enough, we end up seeing the sell signals, firm up. The ES is at 74.95 right now. It really gets into hot water below 74.86, 87. So it's getting very close to area where it's going to start supporting more folks lining up to sell. It's very close to that. It's not there yet. So I'd be a little more careful with that until we know. But at this stage, we're sitting back at what, 28,450s to 60s at this moment. The market's not willing to unravel directly just yet. This is a 5-minute chart. We're in stage 3 of the CTP sell sequence. The triple S indicator's got double red dots, but it's deeply, deeply oversold. Right? This is an area where we should not be seeing too many pauses, too many counter trend bounce candles. And if we see any, they should look like the one that started off the day or the second bar of the day where it imploded back down. So let's see how this behaves, and we can look inside that 5-minute bar by looking at the 1 minute. We've had one positive close. We're trying to come up and breach the champion trend. The breakout forecaster, which we just tagged. Pushing up could take us all the way back up to the 550 area. So we have to be mindful of shorts at this moment, but a resumption short at this stage, could take place as soon as price goes below the speed lines. Probably better to try and get at it below 430 or 435. Probably better at that stage. And I'm just closing down a couple more windows over here to make sure that my speed is keeping up here. Yeah, it looks like that made a big difference. Okay. So I had one window open that was hogging all of my memory. So I'm going to try the short below 430, like I just said. I want to see direct progress down. It should be hammering down. If it starts ripping back up, I don't want to be in the trade. Below the low is the only other way to take it on. Holding the short right now technically is the righter decision. Was entering the short on the last bar the righter decision? No, clearly I got out of the way. Got out of the way with a scratch or a very small profit or a very small loss. Below the low, I could try it again, but this is like shorting in the hole. I am seeing the features on the 1-hour chart that would say that we're breaking the champion trend buy zone. The line's gone. We're below it. Triple S is starting to breach the center of its channel. It's not there yet. That's the next shoe to drop, if you will. We've already got the tentative sell signal there. We see the breach below the center of the channel. Down the ship can go. So folks, quick question right now for those of you that are trading. Simply let me know, long, short, flat, L, S, or F. You can type that into the chat. And congrats to those that are saying great things about passing their velocity accounts on FFF, stuff like that. That's amazing. I'm glad to hear that. So that's great. I'm just keeping an eye on the chat from the corner of my eye, but right now I'm going to look at what folks are doing. I'm seeing 80-20 split flat to short. So 80% of the day traders are flat at this stage. 20% are short. I see very few. I don't see any longs that I can see in the chat at all. So you get a sense of the sentiment from the group overall, which is what I wanted to provide. And we're hanging out at a support area. This is the hourly chart. That's the champion trend buy zone trail line. It's going flat and we breached it. So it's disappeared under the current hourly bar. The 5-minute is in a sell. Okay. But it's deeply oversold from a triple S standpoint. Okay. And we are in stage 3 of the sell sequence using the champion trend pack, right? We've already had wealth signal, which is the orange ball, a breakout forecaster, absence, breakout forecaster, absence. Okay, speed lines are still configured bearishly, but we're not going lower. And the fear that I have here is the nature of the day. It's configured with the euro went up. It imploded during the day, but it's still trying to hold the water line from Friday. Oil went down dramatically, which supported the gap up in the market. The NASDAQ's outperforming the S&P. The Russell's doing something in between the two. The configuration is risk on, The erosion into the open may be profit taking. All right, might be profit taking. Is it fundamentally strong selling? At what point do we know we've moved into a mode where the selling is really all that there's going to be? When the hourly chart fully converts into a sell signal state. So on the NQ, it's at the precipice of doing so. On the ES, it's not, right? On the ES, if you take a look at the hourly chart, let me just pop that up on your screen. The triple S is in a buy signal state. We're still holding the upper half of the MSR channel. We still have the double green dots in play. I'm not saying that this is weak. Obviously, it's weak. There's no question about that. But we're in a buy signal state from the gap up, right? We're a little extended. That's based on the position of the triple S line in the 4-quadrant channel. But if you look at the absolute value of the line, it's not in the mid 50s. It's not in a spot where it can't continue to get extended again and shoot up to the top of the channel. If you look at the narrative on the tool, campaign was launched. Soldiers have been taking, campaign was launched well earlier. Soldiers are taking the king and the queen, which is the blue line, the slow momentum line, on another victory tour. If the soldiers intersect with the generals, which is the dashed black line, and get pulled down to the king and the queen, they're probably going to take them home. But we haven't seen that event transpire yet. We need to be in the lower half of the MSR channel for that to happen. So the hourly chart on the ES is giving me a little bit of cause to go, okay, this might not be an unravel morning. This might be a scare, but not a tear, a shakedown, but not a breakdown, that kind of thing. And you can see that champion trend buy zone trail line coming back in underneath price, right? Okay, so let's go and take a look at the potential for a turn here. I think that there is potential. It's a risky trade. Okay, let's see if I can make it through the 10 seconds and get anything profit positive out of it. Speed lines are configured properly. It's a very high risk trade, but I'm demonstrating to you right now that, look, I don't see the selling continuing. Obviously, I'm doing it on a tiny contract. And if we come down below the fast speed line, I'm going to bug out. But is this the beginning of a positively divergent lower low that turns the market around? The hourly chart's champion trend buy zone trail line came back in print. The bar is live, so obviously you can move around. We've got 8 minutes to the end of the hour, so we'll see how that plays out. And currently that trade's not working out. I'm not going to stick around with it if it doesn't stay above that fast speed line on the 5-minute chart at a bare minimum at this stage. But there we go. And it's trying to push up through, potentially the slow speed line, which is at 500. That's the battleground, 500 to about 515. Remember that 515 number? Above 515, I don't want to be short. And I certainly don't want to be in this trade for very much longer because it was a very risky decision to take on to begin with. But what I'm trying to demonstrate here is I don't have all the signs and signals in play to tell me that this whole thing will just come unglued. It's just not there at this moment in time. Now, as we move into the end of the hour, let's see if that 1-hour chart maintains the champion trend buy zone trail line. And concurrently, I'd want to see if on the S&P E-minis, we can get and hold back above the top of the MSR channel, which is roughly 7,500, 7,499 and change. If those two things happen, we're probably going to be in a bounce. If not, it's a trounce. Down we can go, and we can come down and start, as someone put it in the chat earlier, attacking that gap. So it's a bit of a waiting game at this stage. If one wants to be in a trade at this moment, I think flat right now, short becomes valid again below 430, 432. Long becomes valid more so above really 550, 560, but as early as 515 could be considered. We didn't see the a little bounce, up over here from about 948 take us really much further. Got caught in the champion cross sell zone, and we got whacked back down. But as you can tell, it's not giving in. Triple S is doing something incrementally bullish. My bet is that this thing is going to probably try to rise back up into the 550, 500 area. Now, again, one doesn't have to trade it. I'm using a tiny contract to play around with it. If we come back down and eat into halfway of that, the tail of the prior 1-minute bar, without doing much damage, I get out of the way. I'm not interested in staying. I'm waiting for that end of hour turnaround that that can then suck price up which would be a classic setup. Now you've got a low on the triple S line. You have a low with a base, higher to equivalent lows on the triple S line, weak form positive divergence. And again, I don't want to vie for the long side. I don't want to vie for the short side. I just want to see what's there. So what's there right now is a market that's trying to build a base and has not come down through it again. It's attempting to build a base on a 1 minute chart, hasn't come down through it. But the sell signal state is pervasive still. This could very simply be a bear flag and then down the ship goes. And it has punched a hole through the hull, right? That's the 1 hour chart champion trend buy zone trail line. It's punched a hole through it, but that line is still there. Now it's flashing off, and we're almost in the 430 area. So if this thing if one wants to look at reshorting it, I said around 430, 432, I could try a short, and hey, I might just do that. I might just wait. We'll see. We'll see how this plays itself out. Are folks keeping themselves under control this market morning? I'm guessing more money has been made on the short side overall, but let me know how you're doing. If you're keeping yourself under control and you're making measured decisions, type the letter Y in the chat. Let me know. If you've got some results you want to share, you're more than welcome to share them in the chat. But effectively, I want to just make sure that you're okay. Okay, we're coming close to 432. I said I'd try the short below 432. We just tagged 430. We're below 432. I'm trying a little short entry right now. It's obviously near the low. Can we breach the low and break? Okay, a little profit there. Are we going to continue lower? Don't know. I need some profit, so I'm going to take some very shortly. Okay, now where is this headed? Okay, where is this headed is the next question. So we can keep going up in time frame. And the hourly chart, well, the ES has breached into the lower half of the hourly chart channel into the end of the hour. The hour is not closed, so we'll see. But obviously, we're well below the champion trend buy zone trail line. We've punched a bigger hole through the hull. On the 4 hour chart, there's no support structures underneath price. On the daily chart, are there any support structures? It really is all about Friday, right? So there's no support structures here. So we can kind of break the chart up into pieces using the plain closed chart. I can pop that up in a second and we can look at it. But at this stage, just riding the speed lines down underneath the 5 minute chart, underneath the 1 minute chart can be the way to operate. So the last entry was at what, 430, 432, and we're sitting at 400 right now. We had a good acceleration and then abrupt stall out. So very close to round number. The ES is below 487, 486 now, and the ES is promoting continued negativity on the NQ. So shorts can remain in force. I'm not in one, unfortunately, but for those who are in them, they can remain in force. The ES is now coming down right to the bottom of its hourly chart channel. So there's going to be either support here and a reversal, or it's punching right through. My bet would be that there's going to be some staying power here. So be careful. Trail tighter with the shorts on the NQ would be the insight. We're at 385, 380 on the NQ. Now in the 370s, the ES is still punching through lower. So it still gives one permission to remain in shorts on either side. Maybe I'll try an ES trade at the top of the hour. But right now, the insight that I'm going to just keep on keeping on with is, while the ES is below the hourly chart's MSR channel bottom, which is sitting at 74.83, okay, the short thesis remains intact, and we can continue to whoosh down. We're at 28,360 at this moment. 360, 355 on the NQ. Shorts can remain short. The last short entry was called out at 432. So that seemingly has been a profitable call for those who are still in the short. Trailing tighter was an insight while the ES was holding in and around and trying to breach the bottom of its hourly chart channel. It's breached it by a degree that's more than noise at this stage. And of course, it's hard entering a short, especially right at the change of the hour in such an oversold state. So one wants to be careful with that. I would not want to enter a new trade at this stage, and I would want to trail tighter to see if the top of the hour brings in an oversold bounce of some form. ES is just continuing to stay well below, and we're very close to now the hour converting with the triple S sell signal remaining in play, and we breached the center of the channel. So the insight here is the soldiers have been told by the generals to bring the king and the queen down to the center and down into the lower half of the channel, which is homeland, of course. Let's just see how beginning of our dynamics affect things. If we're going to keep going, I'm going to join in on a short side trade imminently. There is support at around 310, 315, but we breached. We made a little bit of a lower low. So I'm trying a short down to about the 310, 315 area. I'm going to bug out above 340. Don't want to be in the trade above 340. We could see a very quick back test of the breakout forecaster at the 390 area. So those that were in shorts as the hour converted, you've seen me demonstrate. The entry did not work at the top of the hour. It's trying to reverse back up and give us a counter trend bounce. Does that warrant a trade? Not necessarily. At one point, there will be a bigger turnaround, but it doesn't have to be here, right? It doesn't have to be here. We didn't even get up to the last breakout forecast. There's only one of them here, and we're coming right back down again. And we're probably going to punch down to 315 to 310. That is the next local area of support. And let's see if I can get a trade out of it. There we go. Okay. Profit taken at that area. Right at the area that we discussed, 310 to 315. There was some support. It's holding. And look, if we go sub 300, we're effectively in the spot where we've got room down to 210. It doesn't have to make it all the way, but that very easily could be traversed. And again, that would have to be below the 310, 300 marker, really. So let's give it a moment here and see if it wants to breach the round number. And if the momentum wants to continue to the downside, I'll join. 306, 307, 305. So it's continuing to weaken. Is it going to flip under, or are we going to get an oversold bounce? That's kind of the moment that we're at. And one of the other things that we can do here that might be useful to those that are day trading this move is get a channel on price action. Really from roughly around there, right before the open, through to now, a channel could be useful. See if I can get one on without disrupting my machine too much. Looks like it dropped off to the bottom of the screen. I'm going to leave it off for now. Effectively, the one line that matters is a downtrend formation, right? If we're going to come up above 400, we intersect with a downtrend formation. 400 to 450, somewhere in there is that zone. And you can see the channel anyways. The channel is that downtrending formation. Right, you come up into the low, come up above the champion trend sell zone trail line, which is sitting at 435, 432, where we had a short. Back above there, then the downtrend formation is breaking. But we just broke round number, so I'm going to try the trade on the short side in a deeply oversold situation. So if I get whipsawed over here, I'm aware that it can happen. I'm going to contain my risk to the speed lines. Right, I'm willing to have that range of risk, because I'm doing it with a micro at this stage. If I was doing it with a full contract, no. So remember, we're shorting in the hole, right? It's deeply oversold. We've got room below 300 down to 210. And not going to stay in the trade if it starts to come back up above the speed lines. So it may very easily come right back down again, but at some point in a deeply oversold state, we're going to have a very significant counter trend bounce. And what I'm seeing difference-wise between the ES and the NQ is the ES is building a base on its 1 minute chart. Let's just expand that so you can see it. Right? It's building a base. It does not scream out it wants to make the other leg down. Obviously, it can. It's in a sell signal state, but it's building a base to potentially rise back up to test falling resistance, which would be, in the 74.89-ish area to 74.93 area. And if that's happening, the Nasdaq's going to get pulled up by it without too many questions, right? So I would want to be very careful with the decision to short at this area. Let me just manipulate this slightly. Okay, there we go. And that linear regression channel is now on screen above, interesting enough, where that last short, well, around 335 or higher, which we've already been above on this 1 minute bar. We're probably going to come up to the top of the channel, which is 410-ish. We're still below it. So if one is short, yes, remain short. If we come down below the bottom of the channel, we can have a spike lower and reversal back up. So, below 265, a move that could take us all the way down to the support I mentioned at 210 could take place, and a quick reversal right back up. So the decision to be short, stay short is here. We're below the speed lines, and it is aligned. I think I'm going to try it because I'm seeing the ES now breach to the bottom of the base that it's trying to build. And I don't want to be too patient with it. Either it works pretty much right away and we get down and breach the bottom of the channel, which is that green line. Center of the channel is white, top of the channel is red. I'm not seeing it work well enough. I want to see 265 being breached. That's another 20, 25 points lower than where we are. If that bar starts to go green on me, I'm going to get out of the way of the trade. One could try and catch something below 265, but in earnest, I said, hey, I'm going to try it. If we come down below the bottom of the channel, we can have a spike down, but we're going to come right back up, which is one of the features of operating in a channel as well as we have so far this market morning. Now, from right before the open, this is a 1 minute chart. Now we were as the channel just started to form. Okay, we came down, defined the bottom, defined the top. We had one full oscillation. We had another oscillation. Right now, I'd like to see a full, complete third oscillation. Test the bottom, breach the bottom. Then I'd know very likely we're going to come right back up to the top of the channel before another down move. I don't know that perfectly yet because we haven't hit the bottom of the channel. Okay. And there's a tell in that, if we come up above the center without hitting the bottom, we're probably going to break the top of the channel. We're probably going to come up above and change direction. And that's a good point on the gap. Right, if we take a look at it on 4-hour chart, actually probably better on a 5-minute chart. Right? What's the saying? All gaps must be filled, right? So there's your ending spot on Friday at 4:55 p.m. Eastern time. There's where we gapped up to, and price is already engaged with it. Now, can we go lower? Well, the next local area is around 210, 215, somewhere in that territory. So sell signals are still there. We're deeply oversold. Okay, those who want to short have to bring it, in a big manner right now and take us below the bottom of the channel. Now, when you look at it on a 5-minute chart and you look at the same calculation with the same linear regression channel, we have tested the bottom. So if we get through the center, we're headed back up to 400, just below 400, and we're trying to breach the center right now. We're trying to breach it. We're above the center on the 1-minute chart without perfectly testing the bottom. High risk long up to the top of the channel with a micro. Still not necessarily the best trade, but it is a bounce that can take us up to the top of the channel. The channel has been respected, we come back down below the fast speed line, it's a bust. Forget it. Not interested. It's trying to poke its hairs up above, the breakout forecasters here, and it's struggling to do so. I'm going to stay out. I want to see if that holds, if the fast speed line cross over the slow holds, if price holds above the center of the channel is at 310 roughly. And if we start to grow a green bar anytime soon, this minute or the next, there's a risk of the top of the channel breaking, but we clearly are not. We're headed back down to the low. And let's see if we can breach the low, if I can jump into a trade on that. So I've taken it on a little earlier than the breach of the low, pretty much on a tag of the low. The ES as well is in a spot where it's coming down, trying to destroy the base that it's built. Has not destroyed it yet. Okay, it's come very close to it, below 69.5. It destroys it. And of course, we can go and look at the gap fill dynamics here, which have not been filled, right? Have not been filled on the ES. That would be down in the mid 40s. Okay, so just FYI. Okay, so let's see if this short, gives us anything further. It closed low. It's continuing lower. We've got room down to about 215, 210. It's profit positive. The closer we get to the bottom of the channel, the more interested I am going to be in taking some profit. Trade was in force longer than 10 seconds, so I'm all good. Now, what typically will happen at the bottom of the channel is we'll whoosh lower and then rip right back up. How deep the whoosh is? Probably to 200, 210. So we might get a 20-pointer out of the breach below 230, and it's intent on doing so. So those that are in shorts right now, manage carefully. I don't think I would exit unless we're back above 75, but that's to each their own. Everyone has to manage their own P&L accordingly. But be careful above 75. Doesn't mean go long. And if we look at the price action against the 5-minute chart channel, it has breached below it, right? It breached below it. Just make sure it's following price properly here. Boom, boom. Yeah, see, you can see that it's breached below it. It's got the tail below. It's trying to come back up into it, which is normal action. All right, we just saw it a couple of bars ago, the 10 a.m. bar. I want to make sure that I take care of folks that are managing things on the ES as well here. And look, the risk on the ES is that it fills the gap too, right? And obviously that will drag the NQ lower. If it's going to fill the gap, there's another 20, 25 points of weakening that can happen. And at this stage, we've got a sell signal state on a daily, 4-hour, 1-hour, 5-minute, and 1-minute chart. It doesn't get better than that in terms of alignment. However, we're not at the beginning of the drop, right? We're not at the beginning of the drop. And Angel, that's a good point. On the 1-minute chart, there's no more breakout forecasters on this resumption, right? We ended the last breakout forecaster we got on a 1-minute chart was back here at 10:03, right? And then we came back up to test the last and second. We didn't get up to the third or fourth, and speed lines crossed over. We came down again. I shorted it again. It was profitable. So right now we've got the fast speed line below the slow. We're in a well-aligned sell signal state. It's deeply oversold. No good reason for a long side even consideration until we're in the upper half of the channel. At this stage, I've tried a few of them to see if we get a rapid reversal point, but there's still more than enough selling pressure, despite gap fill on the NQ. ES is not gap filled yet, so there's still pressure there. And we're in a well-aligned sell signal state on the ES and the NQ from a daily chart down to a 1-minute chart, right? It's sell signal state daily, 4-hour, 1-hour, 5-minute, 1-minute. There's no misalignment. And the 5-minute chart did have a breakout forecaster on the last bar, right? So we have to be clear. We're still in stage 3 of a sell sequence. When we're trading intraday, we're really trading the 5-minute chart, using the 1-minute chart as a triggering mechanism. So coming back down again would not be strange here. It would be strange if we start coming up above, bearish structures on the 1-minute chart, but we've got a little room to grow that has to happen before that can happen. And that would be, getting really above 360 at this stage, 365 at a bare minimum. Get above the champion trend sell zone trail line, above the channel, above the champion cross zone, into the MSR channel. But now I'm seeing the slope down here. Oh, it flattened out. Okay, let's see how this works. At one point, there will be a more of a larger exodus of shorts, right? And the bunch will cover, and you'll get a tear higher that breaks downtrend formations. This could be it, right? I tried a couple of moments earlier. I tried it on this side. It didn't work. We came down, we made lower low. I shorted again. It was profitable. If I want to try a long again now, I don't really want to know that the structure is broken, even to demonstrate. So the bare minimum would be 335. I probably will want to wait for 365. And if this thing is going to be dragged down by the ES, if the ES wants to gap fill, there are some positive divergences locked in at the lows that happen at 10, 11 a.m. So if I wanted to trade the NQ lower, it would have to be, I think I'd probably wait for 210 at the end of the day. That's where local support is going back to Friday. But if we're thinking, thematically about where things are, oil still down from Friday. Euro, unfortunately, has weakened, but we're not in a spot yet where the market has seen what it's waiting for, which is on Wednesday, Microsoft and Meta. Obviously, it's not believing the geopolitical cooling off, and the ES still has a gap to fill. So skeptical on longs until we see at least a 1-minute chart not being sold down anymore and not burdened by sell structures, which we still are. So if one wants to reshort, it could be right here, center of channel at 250, 248, which I'm going to try right here, right now. Or it could be below the low, or it could be below 210, effectively where we kind of came down to on Friday. Let me just pull it up on a 1-hour chart. Down over here, which is around, actually, it's, to be specific, 212. Okay, so my trade is in force. Let's see if we're going to push down lower than the lows that we got on Friday. The ES really is my guide at this stage. It's not at the low of the session, but it's just a few points away from it at this stage, a handful of points away from it at this stage. So I'll show you that right now. I'm still in the short on the NQ. My risk management will be out if we go above the speed lines, which we might be doing right now. Let me just get this off screen. And if that happens, I will get out of the short. But really, I wanted to show you this, right? I'll go back to the ES chart in just a second. So if you look at the action here, below 62.5 is all we need. We're just a couple of points above it, not now just a point above it, right? Below 62.5, we're headed down to 57.75, or all the way down to gap fill. And this trade was modestly in the money. It's now out of the money. We're getting indecision. I don't like that for the short. I want to see direct down. If we cross the fast speed line, which is pretty much where the slow speed line is, they're both very close to each other, around 250, 253. I don't want to be in a short. We're testing. We've crossed the fast speed line. We crossed the slow speed line. Is this the turnaround? We've locked in another positive divergence. I'm seeing that on another screen. I'm not seeing the impulse to buy be strong enough yet to say all is well, but it is certainly coordinated. The ES and the NQ are both lifting off at the same time from similar areas against structures of resistance. The 1 minute chart is coming very close to the, on the NQ, 28,300, which is the top of the downtrend channel. Breaching 28,300 is a very strong warning for those who are short. We're effectively then building a base and trying to launch up off that base. Whether that'll be productive to get us above the last little high here is going to either clinch the deal for the down is done for a while or not. And effectively getting above 295 now is the number. And then confirming it by getting above 350 says direction is probably changing. We don't have that yet. So those who are still short and trying to milk more out of it, just be careful until the base is broken. I'm probably not going to re-enter another short, but if I was gonna, it would be below 225. And it would be played down to lower lows than Friday, of course. Right? The lows on Friday, what we just saw was what, 212 and change? It's very tempting to try to get into it. So are folks trying at this stage? Let me know. Well, it looks like folks had a great morning overall. I'm super happy to hear that. I'm super happy to hear that. Sorry, I haven't been paying so much attention to the chat, but I hope folks are doing well. If you've been able to manage through the morning fairly well and make decisions you're comfortable with, give me a lucky number 7 in the chat and share that with me. I just want to make sure that you're doing okay here at this stage. Looks like folks getting that response back. That's amazing. Emmanuel, that's lucky. You went short at 432 and internet went out, and yep, the account should be up quite a bit. That's amazing. But I hear you. So this is the moment in time where the value that I can provide is, look, we're at a positively divergent lower low. We're locking in more and more positive divergences on a 1 minute chart. The 5 minute chart still saw the last closed 5 minute bar on the NQ give us a breakout forecaster. So we're still in stage 3 of the sell sequence. There it is. There's the breakout forecaster, right? We're still in a downtrend channel. That downtrend channel is still in force, right? It has not gone away, but we're kind of toggling around the center line of that downtrend channel. That white line right there, we're slightly above it right now. If we come up above the top of the channel, we have to be concerned that direction may be changing. The direction may be changing, right? And what happens after a sequence ends? Well, we need to know that we've got an absence of 2 to 3 bars with no breakout forecaster. Currently, the current live bar doesn't have one on it, but it could very easily appear before the bars close or on close. So we're still in a sell sequence. It's still pervasive. We're now down to the 212 marker. Shorting again is open. The ES is telling us it wants to potentially go down another 15 points or so, 15, 16 points. And fill a gap. And I'm going to try another short right below 200 if I can get it. If I can't get it below 200, I'm not, because every time we lock in a positive divergence and break it, it does more damage to the case of a base being built. And that's what's happened. And we know we're in a sell signal state that's well aligned from top to bottom, from a daily chart down to a 1 minute chart. The real question is, are we so oversold that we're going to get a mass exodus of shorts that requires buying to cover? Hey, I'll believe that direction has a chance to change above the top of my downtrend channel, above the top of the champion cross sell zone, somewhere in the 280s, 290s. Otherwise, I'm going to try another short right here, right now, because we busted below the center of the channel with some violence. The ES is in the 74.50s now. And we might be headed down to the bottom of this channel. We've obviously taken out the 212 low. So it's a profit positive entry. It's been in force for about 15 seconds, so I can take profit, which I'm gonna. And then we come down below the low, I could try it again, right? That's the idea. On the way down to the next potential lower low, taking smaller pieces of the move makes more sense because of how oversold we are. And we did get a breakout forecaster on the last closed 5-minute bar, right? So we're still in stage 3 of the sell sequence. Now we're hitting the bottom of a channel. We've seen what's happened pattern-wise when we've done that. And we're specifically looking at a 5-minute chart, specifically looking at this channel. I'll make it a little thicker here so it's a little easier to see what I'm talking about. We come down, we perforate. Next bar is positive, indecisive. We have a move up of some sort. Now, it's happened here, 9:35 a.m., happened here, 9:45 a.m., happened here, roughly here at 10 a.m. That was an hour change involved. 10:05, it did happen. Hit the bottom, indecision. So is this time going to be any different? Patterns are patterns for a reason. So at this stage, I'm gonna surmise that more likely we're gonna get a indecisive bar that pokes above the center of the channel, tries to come up to the top. It may fail because we've obviously come down and broken lows, and we did get a breakout forecaster on the last closed 5-minute bar. We're still in stage 3 of the sell sequence. I'm going to take us back down to a 1-minute chart. And by the way, the ES is at 74.53. I think it's intent on gap filling as well. So it's got another 7-8 points to go to fill the gap on its side. And it might be a better, cleaner short because it's being attracted to that gap fill area like a magnet, which actually technically on the 2 p.m. Eastern time bar, the close was what? Let's just take you there right now so that we're very clear about that. So the close on that bar was 44. So we've got 7-8 points to go to get down to the close. Maybe 10 points on the ES. It might be a cleaner short for those who are trying short versus the NQ, which is more deeply oversold. So that can be a fairly solid insight for those who are trying to trade one or the other at this stage. And in order to add a little value based on what other traders are doing in the room, what I want to do is just provide you with, the sentiment from the group. So for those of you that have a moment, type into the chat, are you flat? Are you short? Have you flipped to long? So you can type in the letter L for long, S for short, F for flat. And what I'll do is if I get enough responses back, I'm happy to communicate that sentiment back to the group. I'm going to presume that lots of folks have, reshorted and are in shorts right now. Let's just see if the vote is very skewed. Sentiment votes work really well if it's kind of lopsided. If like 90% of the room is saying we're short, okay, we got to watch our backs. Something else can happen. And I'm seeing more of a 70-30 split, short to flat. I like what you put in there, Jeff. So I don't have a skewed sentiment vote. We just have a skewed location, but we're continuing down. The ES is now starting to breach into the 74.40s potentially. It's at 74.50. And as it breaches, it's probably going to make it all the way down to 44. So it might be a more stable short. You're looking at a 1-minute chart of the NQ on screen right now. We did get one breakout forecaster on the last 1-minute bar. We're still getting breakout forecasters on the 5-minute bar. We're well below the bottom of the channel. So we're just a couple of points away, a few points away now on the ES from a test of the 74.44 line. It looks imminent at this stage. For those who are in it, to win it, it's still a stay short. You get above 74.50, and you probably want to get out of the way and wait for another downdraft if it does come. I'll flip you back to the 1-minute chart on the NQ here. Very close to the bottom of the channel. ES is so close, almost there. I'm trying it. I'm in it. And I'm probably going to take profit imminently if it doesn't just drop. I'm up a point, 2 points, half a point, somewhere in that area. And I am closing my ES trade with about a point of profit as we reach 44. Okay, now we've reached 44. We breached 44 on the ES. Is it following a similar pattern to the NQ? Are we about to make a lower low? Well, we saw a whole bunch of folks cover at the 44 area or just below it. A whole bunch so deeply oversold. Narrative-wise, this would be the perfect area for the selling to stop, build a base and then turn around. But all that matters is what the signals say at this stage. We're below 44. We're at 40 now, and we're dropping faster on the ES. We obviously came down and made a lower low. We got down to the big danger line that I quoted to you at the beginning of the day, 28,100-ish. So it's a very dangerous area that we've gotten down to. This is the edge of the abyss, right? This is the edge of the abyss. This is that area where things can get a lot more unruly potentially. And I'm kicking myself that I'm out of my ES short, but let's see if there's another entry that I can fashion for myself. For those who are still in shorts right now, the ES has gone from 44 to almost 34, I think to 36. And effectively, it's rivaling the lows that we had on Friday, or coming close. It's still not there. The lows on Friday were around 74.12 or 74.10, somewhere in that area. We're at 74.41 right now, so there's still room for it to potentially drop. And for those who are pursuing the short on the ES, it's hard to argue with it, right? The argument against it can only start to form if we find price action sustaining above the speed lines. We get above the slow speed line and we sustain above it, then there's some cause for pause. And then we're thinking about the deeply oversold condition that we're in. Same sort of thing on the NQ, right? You're just looking at the 1 minute chart here on the NQ. Slow speed line sitting at 106, 105. Last breakout forecaster is at 130-ish, right? There's still no reason to get out of the short. Yes, it's pausing. Yep, we breached the bottom of the channel, but it can continue being hammered. You get above 28,105 and then confirm it by getting above really the center of the channel. Okay, there may be a temporary direction change afoot. But no dice on that right now. And there might be another short imminently here. It's hard to take it on in such an oversold state, but what else is one going to do if you have to make a trading decision? I'm going to try one real quick. I've entered and I'm not seeing it effective right away. I'm seeing it ineffective right away. So my finger's on the trigger to get out unless I see that bar go red and drop. If it goes green and pops above the slow speed line, which is the magenta line that is right above price, out of the way. Yeah, I don't like what I'm seeing, so I'll take my scratch. And it's so deeply oversold that, yes, of course, the natural concern is going to be we're in a spot where it can turn around. Now, we've had two bars on a 1 minute chart without any breakout forecasters. The triple S indicator is not below the bottom of the channel. It's not below the bottom of the channel. Okay, now let's just compare that to the 5 minute chart. It's well below the bottom of the channel. Okay, so this position of my indicator, the triple S indicator, where we're so deeply oversold on the primary day trading chart, the 5 minute chart, and the 1 minute chart's not in that same spot, that's a disconnect. Okay, so there is there's evidence here. Unless we drop hard and fast at this moment, still the triple S line is holding the bottom of the channel. If it starts breaching it, we start making a lower low, there's not too many questions. But if you look at the differential between the 1 minute and the 5 minute, let me just put the 5 minute on one side over here. Okay. So you can see what I'm talking about. Okay, I'm talking specifically about the subchart indication, right? This is very different, well below the bottom of the channel versus what we're seeing on a 1 minute chart. which means the aggressiveness of the selling in the very immediate time frame is not as strong as one would think. Now, it can start up again. We can see the triple S line, breach below the bottom of the channel, which it's starting to on a 1 minute time frame, and start to splay below and just support the deeply oversold condition. And we keep getting hammered down. We're below the danger line, 28,100 roughly. But this is a bit of a divergence between the 1 minute and the 5 minute chart. So I'm aware that that divergence is there. Okay, I'm not going to be in a short right now. I attempted one. I didn't see it work. I got a scratch and scratched out. But for one that's in it right now, all this is a little warning. It's a pretty stark warning. It's not as strong as coming up above the top of the downtrend channel, obviously. And we still got a breakout forecast around the last closed 5 minute bar. It just closed 10, 20 seconds ago. So down we're going. We're seeing the triple S line spread below. Lower lows are here. The ES is sitting at 74.34. It made a lower low as well. And on the ES, if you look at it, it's let me put it up on the screen so that you can see it. I'm just going to compress some of the time frames here so it's not as noisy. So very similar, but the ES is not seeing the same type of divergence between the 1 minute chart triple S line below the channel. Now, it's not as far below as the 5 minute is, but it is well below and it stayed below, right? So if we start to see this 1 minute chart triple S line crawl back up into the channel, and that kind of mimics what we're seeing on the NQ, it can be the beginning of a turn back up. All right, folks, are you in the money? Are you doing well? Let me know. Give me a lucky number 7 in the chat. Are you getting what you need from me? Let me know if you're getting what you need from me. So we're again in a spot where it's not done. Okay, we're still seeing the ES and the NQ's 1 minute chart triple S line below the bottom of the channel, barely on the NQ, still significantly on the ES. The ES can come down all the way down to there's another 20 points of downside, which would, of course, drag the NQ down considerably. And below round number, there's probably going to be another round of selling, which I might want to try another short on. Okay, folks are doing well. They're under control. That's good. So those that are in shorts right now and continuing to profit, my role right now is to go, where are the warning signs cropping up? Are we in a spot where things could be changing? Okay, and I've tried to curate that insight for you. I've not seen it come to fruition, and I'm not vying for it one way or the other. I just want to be aware of it. I want you to be aware of it as well. I do not have the triple S line on the NQ well back into the channel, the 4 quadrant channel, nor is it there on the ES either. So the short is still alive. But if I see this, what I'm seeing right here, right now, that's a warning, right? The fact that the 1 minute charts, the soldiers are trying to get back into the confines of predictability, while the soldiers on the 5 minute chart are off the bottom of the chart, is a divergence. It's a positive divergence. Okay, so lower low, positively divergent lower low, warning. We're seeing that warning right now on the ES intra 1 minute bar. It's not confirmed until the bar is closed, but it's happening. You can see the triple S line getting back into the channel. And that's going to necessarily, it's obviously price driven, the indications, right? The pattern is against the location of the indication. And the indication is now giving me the warning saying, watch your back, shorts, right? Yes, it may start up again, but right now we might be at the beginning of a counter trend bounce that's a little more significant. Now, and the bar closed that way. It closed that way on both fronts, right? So here's the ES 1 minute chart, triple S line closed back in the channel, trying to turn the 5 minute triple S line back up towards the bottom of the channel. And this can become a real turn in the market. Be aware of that. Be careful with your shorts at this stage. Be very, very careful. I'm not saying it can't work out. I'm just saying be very, very careful. I want to see if I can get my other chart up on the screen here for you. Let me see if I can do that. It might be helpful to understand where some of the other things are at. So sorry for the blank screen. Just hang tight for a second. See if I can pop it up here without hurting my stream too much. Bear with me for a moment. I have a bunch of windows set to open up when I open up a fresh browser, which is causing a bit of a glitch here. So apologies. You might see some glitchiness in my feed. Apologies for that. Okay, give me a second. I'll have the screen back up for you in just a moment. Okay, so we have come right back down. We're making lower lows. We're in the 74.20s on the high 20s on the ES. And looks like I'm having some trouble with browsers and whatnot. My apologies, folks. Sometimes it happens with streams. But we've come down. We've broken back down below the bottom of the channel. It's reinforced the selling. There's no turnaround as of yet. There was a very real chance of it. We didn't get and hold above the center of the 1 minute charts channel. So back to selling we've gone. We've breached the bottom of the channel. I'm not seeing anything here that is very different than before. The only thing that I would comment on is, you know, we're very far away from anything that would be considered normal, right? And exactly, Bill S said we haven't been this low since May 26th, that kind of thing. We're at lows that are significant enough now for one to take, you know, pay attention to and go, if these are going to break, you know, the market is up for some wild action as we move through this week. And that wild action may involve, you know, rips back up during the release of earnings. But this market is not holding up. Right? It's not following the pattern, and the damage that's ensued is significant. And here we go. I'm going to just bring you back to a chart that can help characterize this for us on both the ES and the NQ. Looks like it's finally popping up. So those that are still short right now, the dynamics remain the same, right? You're deeply oversold. You're looking for clues that can tell you that the oversold condition is going to you know, come to a close, and we're going to get a counter trend bounce. It does seem like we want to come and test the lows of last week on the S&P E-minis before that does happen. I'm just getting my charts groomed on another screen here to show you. And similar, well, we've already come down below those lows for the NQ. So we've already done the damage there. The damage is significant, and it puts us in such a deeply oversold spot that one wants to look at this and go, oh, okay, earnings are going to pick it back up again potentially, but not right now. That's Wednesday. And I don't think the Fed's going to be in you know, a huge market mover, but here you go. Okay. So the center of that channel that goes back to October of 2022, okay, has been perforated. What typically happens is we'll see the perforation happen, but then we'll get a slingshot right back up above it, which can happen on the same day. It can happen over the course of a day, day and a half. it usually will not take more than 2 days, a day and a half or more for that to happen. The next move should be right back up above the channel center. So we're at what, 27,000, almost 28,000, 27,980s. The center of the channel is sitting at 28,115, not that far away. So this is a very negative event, but what usually happens when we engage with the center of the channel is, coming down to it, is usually we'll have a slingshot back up above. We don't have any great examples in the recent past of that, only going up through it, not down. So I'm not going to go back and try to prove it out, but the selling is continuing. The NASDAQ is the antagonist of the move overall. The last 3 minutes, we've been going more sideways than down. Be aware of that. That doesn't mean get off the short, but above 28,000 and about 35 points, I would want to be out of the way. We are probably going to get magnetically attracted right back to the center of the channel. So 27,000, 28,000 is where we're at. 28,035 gets breached on this little pull back up. We are probably going to come up to the center of the channel. Here's what it looks like for the S&P E-minis. Let's see if I can bring that on your screen. So we still haven't engaged with it. We still haven't taken out the lows from last week, right? But we've obviously taken out Friday's lows, very close to a weekly pivot level. So both indices are in a spot where the best warnings I can give you are the warnings from the Triple S tool, and the warning is in, right? We've got the warning in, right? The 1 minute chart's Triple S line is now graduating from quadrant 1 into quadrant 2. And it's a disconnect in how it's positioned versus the Triple S line position on the 5 minute chart, which tells me counter trend bounce can be real, right? So be aware of that. And if it is real, it can go really fast back up because folks are going to be covering. So let me just bring this chart back up over here and break it down on the NQ in 5 minute increments here and just give you some micro levels along the way. So what I'm going to do is just take the entire drop, right click on the screen, drawing tools, measuring tools, volume profile. I'm going to start it from effectively the drop 9 a.m. onwards, just bring it out into now. Center of mass of the entire range was over here, most contracts exchanging hands. Now I'm going to the halfway marker. Center of mass from that point in time is actually at 240. Now I'm going to go to, so I've remarked the numbers. Now I'm going to go to the last little bit that we have, and we're above center of mass, which is at 28,000 and a nickel. So I'm going to graduate it back to the last dropping point, which is right over here. It's still holding 28,000 and a nickel. So I have to be aware of the fact that, and it's still holding it. So we're in a reversal right now that's becoming very credible enough to tell us that we may actually change direction for a while. So be aware of that. That doesn't mean flip to long, but to those that are actively decision making that have been in shorts for a while, one wants to be very, very careful at this stage. Okay. So I just want to get you to the insight over here that we saw it led by the Triple S tool telling us that I want to get that window out of the way so I can use it on another screen. There we go. We were told by the divergence of the Triple S line staying in the actual 1 minute chart Triple S channel, unlike where it is on the 5 minute channel, that there's a positive divergence in the behavior of the two indications. It required a further drop. It happened. We've come up above the center of the channel. We're testing the top of it right now. The insight that I just gave you is using volume profile. The number at this stage now is sitting at 28,025 points, which were 10 points above. Okay, that's where that volume profile waterline is, or volume point of control is, from the last leg of the drop. From that indecision, post that indecision candle, we have the next leg of the drop. Okay, and we're dangling, we're poking our hair slightly above the 28,025 marker right now, which is enough to tell one that, look, direction change might be real this time, right? We've gotten through a line where a lot of contracts exchange hands for the last move. And we're above that line at this stage. So shorts could potentially cover. And if one wants to try longs over here, of course, all the power to you. Just be very careful. It can very easily work, but it also is an area where one wants to take great care in their decision making overall. From 74.37 on the ES up to 44 could be the move. And we've already seen a move of about 40 points above decision lines on the NQ, the 28,025 marker. The next stopping point is around the 85 marker. And we're going. It's going to be the impulse to have it batted back down and sold back down is going to be there. And we're coming into the location where the pit fight is on. So this is it, right? This is an area now where if we can break through the center of the 1 minute chart MSR channel, we're going to see a bullish cross on the speed lines on the 5 minute chart. We're going to be coming up, ending that sequence. And, I'm taking on a long right now. I've taken one on the ES because I haven't traded the ES for a while. I didn't start it on screen because it's still a very risky moment, but it's in the money quite nicely, about $287 or so. And, I did some damage to the account a little earlier, trying some high risk trades. So I'm taking my $350 or $25 somewhat profit on this. We're coming right back to test the underbelly of effectively that low from Friday, or that the gap point. And on the NQ, we're breaching above structures of resistance. We're imminent to see a speed line cross. We could be coming up to 220, above 125, which we know, is roughly the center of that long-term channel. We're headed higher likely. Now, it doesn't have to happen right away, but we're in the last, 8-9 minutes of the market morning before volumes lopped off, volume that goes away across the pond. And if the shorts are not going to come back in force right now, the existing shorts that are still in play, because the market is clearly net short, they're going to go away and we're going to get price sucked up. And we had that insight from the triple S divergence on the 5 minute chart versus the 1 minute chart, using the triple S line and the location of the line being in the channel, different than where it was on the 5 minute chart, telling us at the bleeding or leading edge, there's a transition afoot. Okay. It required one more low, but clearly there was a transition afoot. And we then validated it using volume profile. I did some analytics right in front of you, and we figured out that 28,025 was the number. We got above it on the last 5 minute bar. We're still above it right now. Do I know we're going to just continue to rally up? No, I don't know that. But I do know that if selling doesn't beget selling right now, and we don't see downward pressure come in force right now, really over the next minute or two, the net short positioning at a market level is going to be very stressed. So I want to see if I can actually capture a long above 25. We just poked up towards it. We're almost above 25. And again, that's coming from the long-term channel, right? I gave you the insight of where the location of the center line is in advance, let you know what usually happens. That's what's happening right now. I'm going to bring that up on the screen in a second, but I want to see if I can get into this trade. Okay, so we poked above 25. I'm not too happy with my entry, but I'm going to keep it for a moment. This is the insight that I was telling you about, where, hey, we can bleed down below, but the usual action is we'll get ripped right back up to and above it. And that can happen over the course of a day and a half. It happened right away. It happened right away. Now, the trade that I took on is about 10 points out of the money on the NQ. So or maybe, yeah. Let's see if it grows. I'm not too pleased with the entry, and I'm not seeing it be effective. So I'm not going to stay in the trade unless I'm actually seeing buying beget buying. If selling is going to start in true form again, we'd have to come down at least below the bottom of the MSR channel. Have to be below that 28,070, 75 marker. And then we're headed back down to 25. And that would be the next major marker for it to break down. And with respect to the ES, we did get up to the underbelly of the gap area that we tested, 74.44. We're sitting just a couple of points below it right now. It has not, unraveled yet again. I think it's building its base to push up one more time. It's a high risk long, of course, right? So I do it with smaller size. I'm trying it again. It's the same trade, same thesis, same idea. Above the center line, 28,000, 120-ish, 125-ish. And the insight very simply is to take advantage of the idea that into the end of the hour, the net short positioning of the market, some of that volume has to come off the tape, and they're going to have to mechanically buy to cover in order for it to work. I'm not seeing this be effective, and I don't want it to erode my profit that I've made on the day. So I am getting very close to saying, yeah, nice try. That's it. If it goes below the slow speed line, I'm getting out. We're holding it so far. We're holding it. Now we're coming down below it. Holding it. Let's see how this works out. No, it didn't work. Okay. And that's fine. It was a high risk trade to begin with. Now, into the end of the hour, you're getting oscillating signals on a 1 minute chart. They're starting to form. You're getting a clear sign on the 5 minute chart that we are done the sequence that we were in. So for those that are newer, the Champion Trend Pack Toolkit has a sequence, right? It's 3 stages, three parts of the sequence or 3 parts of the dance. We broke it above the top of the channel, so I'm just going to get rid of it because it's just noise at this stage. Right? We started our dance down a little before cash hour started. We got a wealth signal on the 9:25 a.m. Eastern Time 5 minute bar. Breakout forecaster on the next one. We had Champion Trend, Champion Cross in place. Champion Trend is the sell zone plaque. Champion Cross is the more opaque red zone with the dot at the bottom of the main chart. They were in play. We went into stage 2 on 9:25 a.m. We went into stage 3 of the sequence at 9:30 a.m. and that stayed in place up until that bar at 10:45 a.m. And now we've had an absence of 2 to 3 bars with no breakout forecaster and a bullish speed line cross. That officially means the sequence is over. On a 5 minute chart, that means we can go back and test the last, second, third last breakout forecaster. If we get materially above 28,140, the next area is the next breakout forecaster, 220, right? And that does seem like where we're going to be going into the end of the hour. Those that want to try the long out above 144, 145, don't be surprised if you have whips right back down. But it's the whip back down below 125, that breaks the move. So I can try it. I'm not too enthusiastic about it. We're getting very close to the end of the hour. Similarly on the ES, by the way, for those who are doing this on the ES, I'm hopeful that most folks are out of their shorts, obviously. We've got bullish speed line cross on the 5 minute chart. We're above the MSR channel on the 1 minute chart. Fast speed lines above the slow. Now we're in a buy signal on a 1 minute chart from a very oversold state. Where could we be headed up to? I don't think we're headed all the way back up to the bottom of the 5 minute chart channel, but coming up to the high of the drop bar at 1025 would be fair game. So another handful of points higher. Let's see if my trade's in the money at all. Looks like it is. Nothing big, right? I did it with a micro because it's obviously high risk here. And you know what? I'm taking profit while I have it on this trade. But those who are in it from 44 or 45, the idea is it can potentially take us up to 220. 220 is where we've got the Champion Trend sell zone trail line on the 5 minute chart for the NQ. And we've got a breakout forecaster. So that becomes the area that would probably be where we come up to. Probably. And again, there's no guarantee of this, obviously. So be very, very careful. That's amazing, Manny. That's amazing. Well, I see some really good feedback in the chat. Some great results too as well. So as we come into the end of our trading time, I'll still look for some trades after 11 a.m. Eastern time. We'll take a quick 5 minute break between 11 and 11:05. But what I want to make sure that folks are in is in a spot where you go, okay, you've got this interesting configuration to start the market. Oil gap down, markets gapped up. All gaps have to fill. Yeah, do they have to fill in the same session? They don't. This one did. Sell signals persisted. They got more pervasive. It continued longer than I expected. And I still think that we're in a market that is not going to be in full breakdown mode until or unless we see the Mag 7 stock earnings, pressure it further. So for me, I'm tracking everything back to these long-term structures. The center of that long-term channel going back to October of 2022, that's what we just came down and perforated for the NQ. We haven't done that yet for the ES as of yet, right? So the ES, if you look at it, let's see if I can pull that one up. Maybe I have it done here. Yeah, I have it done here. We haven't come back to the center of that channel. We haven't come down and made a lower low versus the lows at the back end of June. All right, so the sensitivity to oil is held in the NASDAQ as well, and the NASDAQ's underperformed. And by the way, the ES made it to 74.55. All right, you can see that on screen here. So that last trade would have worked out for those who are in it. Be careful here, though, right? It hit a target line, hit the last drop line. It can very easily resume selling at the beginning of the next hour. We still have not worked off the negative energy. Until the 1 hour chart has changed formation, you've got grave risk of us having a revisit of the lows or even lower lows during the trading session. The hourly chart changes direction, gets above a major structure. Then we have some rhyme and reason to believe that we're not coming back down to lows. Right now, I could not say that it's in that state. Right, the ES would have to get above 74.75, 74.77, somewhere in that area. We're not that far away from it, but we're still far enough away to say no. Don't want to believe that it can just recover from here. There's enough negative energy to still work off. But that last trade, I hope folks got what they needed and got what they needed out of it. And I'm hopeful that it worked for you. My big grand insight in terms of outlook over here is I don't think we're going to be breaking down wholesale before Mag 7 stock earnings. We certainly got taken down by the NQ today, and the NQ itself came down through the center of that long-term channel and has reversed its action. It's not yet recovered, but it's reversed its action, back up to being above the center of that channel. And, having that value is a useful one. It's one of the risk lines I quoted right up front, 28,100. It's at 115 roughly now. Let's be as specific as I can, actually. Yeah, 115, 28,115. We're about 40 points or so above it. And it was quite the reversal right back up above it, which pattern would suggest is likely. Does it hold? Has it, have we overturned the negative energy? No, we have not. Right? There's still plenty of negative energy that has to be overturned. And on the 1 hour chart, I don't want to bring too many things up here, but until we're back above 28,435, Emmanuel, your area where you shorted from before your internet went out, until we're back above that 435-ish area, 28,435, we're actually not in a spot where the hourly chart will tell us anything different. Well, I'm glad it worked out for you, though. That's amazing. Well, I'm happy, Bob, that worked out for you. That's great, and that's a good way to end the trading morning, going grateful for it working out. Of course. Now, as far as decision making goes from here, I want to take a 2-3 minute breather and come back. I just need to get my cup of Java refreshed there. Then I'll come right back to my desk. So 2-3 minutes. We'll take a little pause. But as far as direction goes from here, while we are above on a 5-minute chart, really it has to be the fast speed line. We know the line on the long-term chart is 28,115. Immediately at this stage, we need to stay above 135, 136 to continue to see bearish positions unwind. But if we come down below 136, you've got the idea that this is going to resume selling square in front of you. Right? We've got such a long way to grow to get back to a state where the signals start to change shape on the hourly chart. That's in the 28,000 mid to low 400s. So that's up where my crosshairs are on the screen right there on the left-hand chart. There's a long way to go. Okay, so at this stage, I would not be shocked at all if we have another slip and we try to come revisit the lows. That insight is valid below 28,135. We could be coming back down to the lows if we breach 28,135. The confirmation of that breach really has to just come down to below 115. Then we're below the center of that long-term channel, and the machines all flip back to, yes, we can sell more. And then down the ship can go. So let's take a brief pause over here. Before we go, did you get what you needed out of me this morning to make it work for you? That's what I want to know. Were the insights right for you to make it right for you? Make it right for your trading. Let me know. Give me a lucky number 7 in the chat. Type letter Y in, or say no, and let me know. Right? I'm a big boy. Both ways will obviously. It's always constructive feedback is always welcomed. Looks like I just got a bunch of 7s, which is awesome. That's amazing. Well, great morning so far, Gus. I'm happy to hear it. Okay, folks, let's take a brief pause. I'll be back here in just a few minutes and we can resume the session, get some questions answered, analyze individual positions. If folks are interested in outlooks on any of the Mag 7 stocks that are presenting their earnings, but you're going to have free reign to ask a bunch of questions until the end of our time together. So I'll be as quick as I can. We'll just be a few minutes and then we'll be back on the horse. All right. Stay tuned, folks. Back with you very shortly. All right, folks, I should be back up on screen with you right now, and audio should be coming in. Just give me a good to go that we are good to go. So market's kind of stalled out, trying to figure out where things are going. It stalled out after a counter trend bounce into the end of the hour, which made sense. Now the question mark is, where are we going from here? And until the hourly chart really heals itself, we haven't solved much. You know, on the primary market, the S&P E-minis, we really have to get back up bare minimum above the bottom of the hourly chart channel. 74, 77, 78 is the number there. You know, you get above the center of the channel, and then there's some real game to say we may actually retrace a good chunk back. That's not where we are right now. Where we are right now is in a spot where there's still so much negative energy in the market that it can continue back down again. And, you know, if folks are looking for a reshort moment or where the ES is getting close to the location, I think we'd want to bust below the 1 minute charts channel bottom before a short becomes realistic again. If we're going to grind up, we can grind up, back test 65 and fail. We can grind up and back test 78 and fail on the ES. Above 78, perhaps things are changing. We're at 53 right now. So at this stage, any pushes back up are still vulnerable to failure and coming back down again until we're really through the center of the channel. You know, I'm going to have to just make that as the 74.85, the market's back to life and alive. Any sort of test of the fast speed line of the hourly chart, which is at 65, we could fail and come back down again. We could fail here. We could fail on a test there. We could fail on a test at 78. And we could fail on a test at 85. We have to get above 85 for the long to really be alive and a retrace back to the drop zone point to actually take place. Could that happen? Of course it can happen. It's a market. It can do whatever it wants. All I want to be aware of is the locations where it could fail, we could get above, and, you know, things could get better, that kind of thing. So that's what, you know, that's the story on the ES side. And right now, I would not want to reshort it until I see damage done to, you know, at least a 1 minute chart structures, at least being below the bottom of the channel at 47. Without that, no shorts. Is it appropriate to try a long? It's very high risk, of course. It can work above 55. That's effectively center mass of this this structure from, you know, on a 1 minute chart going from 1058 onwards. So above 55, one could try. Just be very tight in your risk management would be the idea. Again, I can't tell you what to do. I can just share with you what the insight is. And we're above it right now, right? So if one wants to try it, it's up to them. It's high risk, of course, so be very careful. Let's see if I can bring the 1 hour chart in focus on here. Yeah, okay. So I'm just trying to do the same sort of thing on the ES side, on the NQ side, as I just did on the ES side. And let's see what we got. So we're at 28,150 on the NQ. A back test of the fast speed line on the hourly chart would mean getting up to 260. So 110 points of a rise would have to take place to, and it can fail. It can fail here. It can fail at 260. The NQ has a very long way to go, right? Getting above the slow speed line doesn't even get us into support of the channel. The channel bottoms at 530. So there's a much longer distance to recovery for the NQ than there is for the ES, which obviously makes sense, obviously. And I don't think that we're going to have a stabilized market until we see at least the primary market get back up into the 74.80s at this stage. And there's enough negative energy to reassert the selling and have it happen again. For the NQ, we've discussed a couple of areas where the short could become valid again. I think that bottom of the 1 minute chart channel is mandatory to be broken if a short is going to happen again, and that would be below 120. We know 120, 115 in that area is the center of that long-term channel, and below there, reshort can become material. Right now, the ES is still holding around 55, 54. It's not really going anywhere though. So no longs, no shorts, nothing at this stage. The reshort on the ES is below 48, 47. The reshort on the NQ is getting closer, which I might actually decide to take. But we're in the time of our morning session where I have the chat open up to answering your questions. And of course, providing you with analytics on things that are important to you. So feel free to use the chat at your will at this stage and let me know if there's an area you want to focus in on. Okay, the short on the NQ may become viable. I'm not in a sell signal state on a 1-minute chart again, though, but I'm breaching structures of support. So I said I might want to try it. I'll try it. We are in a sell signal state on a 5-minute chart, 1-hour chart, 4-hour chart, daily chart, et cetera, et cetera. So like I said, it can start to fail right where it was. We are below the center of the channel, the long-term channel. Let's see if this follows through. If it does, the short will keep working. Great. And I'll keep my attention, on the chat. And my outlook on the week is still, I need to see after the damage that's been done today, Anthony. It's a good question. I'm in flux on it. I need to see how the day ends. We are in a market week where there is a very strong probability that we hold up, if not push up, into Wednesday. And that's statistically valid. I was in this trade for about 50 seconds. It was profit positive. So I'm going to have to reserve the right to wait, wait and see. But look, I think that we have a good idea of how the week is going to end likely. So if I pull up the daily chart on the NASDAQ, right, we've seen the pre-trade conditioning pattern on the SSS indicator play itself out in perfect formation, right? We've had the oscillating signals, down, up, down. We need at least 3 signals. We got 7 signals, it looks like. We were left with a down, right? And we had a 1-day close below the MSR channel on the 16th. We had the 2nd-day close below it on the 17th. Technically, the pattern was engageable as a short on the 17th. Now, next few days after that, it didn't work very well, but you can see that it did end up working. This is a very high probability pattern with the SSS indicator giving us those oscillating signals, and it's happening on the daily chart, or it's happening on the daily chart. Now, there was a little warning that maybe it's not ready to go, actually on this bar that was on the 20th, and we did get a move up the next day. We had a cooling off dot, blue dot, but then the double red dots came in and enforced. The math worked, and it continued to follow itself down. And we are below the lows. If you shorted on the close of the 17th, it's obviously a profitable short on a swing basis. Now, it might have been hard to hold during the week last week, but hey, we ended the week tilted down. We're following it up tilted down. We've got plenty of room for the daily chart SSS line to come down to the bottom of the channel, bring the king and the queen, the blue line, through the bottom. The worry that I have on weeks where Mag 7 stocks earnings present is that the pattern for the longest time has been run up into, it looks like my camera stopped working and it's kind of paused. So I'll just fix that. Give me a moment here to fix that. See if I can fix it. Sorry about that. Let's see. No, it's not working there. So I'm going to try it one more time. Apologies for that disruption. But, the big picture insight over here hasn't really changed. Give me a second here. See if I can fix things. So things should be back to normal. Apologies. Looks like my system was really taxed this market morning, but looks like we've got the right inputs. Everything's right. Okay, good. All right. It's normal now. Everything's back to normal. Good. Okay. All right. Good. So now that that's out of the way, to your question, Anthony, I think it's actually realistic to see a reversal that challenges the falling resistive structures on the NASDAQ and on the S&Ps, and then push down into the end of the week. We're just starting off with a day that's breached major things like the center of the long-term channel, which we're actually below at this moment in time for the NQ. We're not below it for the ES at this moment. Now, I think that there is a better than fair chance that we have a up into Wednesday, an up that can take the ES up to, maybe not through, but up to the 75, 50, 55, 60-ish area, and then down again. Now, I'm going to give up on that if I see a breach, that takes us below the center of the ES's channel during today, tomorrow, or during the day on Wednesday before the earnings come out. That would be a very, very negative sign. That would tell us that, even the primary market, where folks are rotating out of some of the NASDAQ names and into some of the sectors that are more balanced in the ES, is not happening, right? They're just raising cash. So I'd need to see a consistent rise in the dollar and a fall in the euro to support that. Now, we started off the day today with the euro actually rising. It's still above Friday's close, but just marginally, right? By 0.1%. Now it's almost unchanged, right? The wick took it up. We are in a bottoming pattern for the euro. We're at a historical low. This is an area going back to like June, July of last year, right? This is the May, June, July of last year. This is an area where the euro should be able to bounce. The dollar should be able to soften up, and that should be couching for an up in the market, especially coupled with the pattern of rise into Mag 7 stock earnings and then fall after. So my view is not really changing at this stage. But to redraw flight paths or anything like that, I'll need more data before I can do that. I'll need at least the end of the day today. I want to be sure that the ES is not in a spot where it's headed down to the center of its long-term channel in the 73.90s. And I don't know that yet because we have not made a significant turnaround inside the day. And come up above structures on the hourly chart that says direction can change, not will, but can. We have not even done that yet. We're still in an area where there's enough negative energy that we could come down and make lower lows on the day, right? It might not be as smooth as the morning's drop, but that could very easily happen. Right now, the market's just relaxing after the massive negative that we've seen in the market morning, and it's trying to get its bearings, but it's still a long ways away from doing so. Even getting above the fast speed line on the 1 hour chart for the NQ would make a big difference. We're not above it, right? That's roughly 28,250. We're trying right now to get above the 1 minute chart's channel top. That could take us, up to the 220-ish area, above 220. There may be some game, right, to get to the 250 marker, and we can assess. But until those things actually take place, we're at risk of this just falling right back apart. It does look like a cup and handle-ish type pattern on a 5 minute chart. But if you look at all of the trending structures, 5 minute up to a daily chart, they're overwhelmingly down. Right now, we just happen to have the champion trend sell zone trail line flat on the 5 minute chart. It's not encouraging another short. It won't probably until we take out some lows over here, and then we can start to see a kink in the curve on the champion trend line, and then down the ship goes again. And if that happens and it drags the ES down, down later, down to the center of its longer term channel, there's monsters below. I think that's the term that I used this morning when we first started off. And Meher, it's a good question, because I think that the message that we've seen is, despite profitability being generated, the expense and allocation to infrastructure is still overwhelming to the market to digest and say it's going to produce, EBITDA results in the next quarter or the next 2 quarters. It'll probably present more expense. Like there's lots of interesting ways that Tesla and Google, made their money in the last quarter. including on crypto and things like that, right? And allocation to, their allocation to things that are not necessarily public yet, like Anthropic, for example. The market wants to see the whale's mouth, which is revenue at the top line, grow faster. If revenue does not grow fast enough to drop enough to the bottom line to cover the expenses of the infrastructure spending, it's going to get punished. So that is my answer at the end of the day. So here we are with the NQ back below 28,115. Selling is resumed again. We're getting sell signals forming again on a 1 minute chart. Is it shortable? Well, the champion trend sell zone trail line is coming in play on a 1 minute chart. It's toggling on, toggling off. Let's see if it toggles on. If it does, and we move into a full sell signal state with the champion trend, champion cross, and if I see my triple S indicator, the red line cross below the blue line, okay, back to selling. We're so oversold that I doubt that that's going to happen. Okay, I think it'll be a head fake. And I think that we're going to have to work off some of the overboughtedness. I think we're just working off some of the overboughtedness over here. I think we're going to be in stasis for a little while before this thing drops again materially. But again, I'm not going to shy away from a short below the 11:15 a.m. Eastern Time bar low, about 28,000 and about 50 points. We're not that far away from it. If we come down below it, sure, I'm game. I'm going to try a short live in front of you again and see if I can get something out of it. But I am going to, of course, pay attention to the chat. Let me just see. Well, Min, I'm happy that it works. That's good, right? That's one of the things that I did on there, right? Trading can be very lonely. You're with a group. I'm here. I'm trying to head it up, and steer it in the right direction. So I'd like to see the person that's doing that if I was on the other side of the screen. So I'm happy it's good. Okay. I want to see if there's any other major questions that have come up here and see if I can address them. Tentative, Abdi. So the answer to your question is tentative. Okay. And I'm not seeing any other major questions come in at this moment in time. So we're going to start bringing our session to a close. What I want to do is just make sure that I give you that broader outlook before I go anywhere. And the two things to watch: oil, euro, and then, of course, the S&P E-minis, whether they're breaching to lower lows, right? The NASDAQ can drag us to lower lows. We're already below the center of that long-term channel. Signals are all negative. We can easily see the short reassert itself. Now, big picture over here, the S&P E-minis are not yet in a chart pattern that is as bad as the NASDAQ. Right? If you're coming down below the center of that long-term channel and breaching the intra-session low was made on the looks like I can hear someone in the background over there. So I think my time is coming to a close probably here. So I want to make sure that I transition over to the folks who are coming on next properly. So let me just make sure that I do that. I hope folks enjoyed the morning session. The most important insight is if we end up seeing the ES drag down below the center of that long-term channel, we've got dragons below. And again, that value is around the 73.90 area. Yes, we can have another round of selling. We can come back down to lows. Breaching that low, having the NASDAQ drag the ES lower and breaching that low, that's where monsters are below that area. And of course, shorting will be great. And the view on the week may change dramatically at that point. And I think you heard that as one of my upfront statements, in this market morning. Right now, resuming the shorting action is not really much of a question. It's in play to resume. We're well below the center of the channel for the NQ, and technical signals align with the selling to resume by and large, right? The 1 minute chart solidified in a sell signal state. And really it is below the 28,050 marker where the next short could be in force. And it could be headed very easily back down to the lows of the day, if not lower. Folks, thank you for your time this morning. I hope you enjoyed the morning and got a lot out of it. I'm going to sign out at this stage, and we'll see you on the flip side. I hope you had a great morning and a great time trading with me and each other. And I look forward to tomorrow with you, folks. So stay safe out there. Treat yourselves well. and make sure that you're making decisions that you're comfortable with, that are in your risk tolerance. Bye for now, everyone. We'll see you on the flip side.